Good morning, everyone, and bear with me. I hope y'all can hear me because my mic's not hooked up for this. One moment. Bear with me.
The DAX is now back into negative territory, down about 0.2% as bear shares fade from the top higher, still sharply higher, up about 8%.
Okay, everyone. Good morning. Welcome to the European crossover webinar. I'm switching over systems, so my mic is not hooked up, so it's hooked up to the main computer, but I don't have my login credentials for Zoom, so I'm having to do this on one of my laptops, and use the internal audio off the laptop. So I hope it's not too bad. Everything should be back on track for Monday. Bear with me. As you can see, the euro's gently sliding. We're relatively in a tight range, to say the least. We have seen the Canadian dollar going to take its dip as crude oil tried to come off of those lows. We can take a quick look at this. Everything's done on just the one laptop here, but you can see this. We ventured off of these lows. That certainly helped with send the dollar CAD lower. Remember, we had that 33.39. We've had that, and that's pretty much kept the market in check. We have not been able to challenge beyond that. Cable relatively quiet. We did get a dip yesterday. I posted in the room. We had support at 20.94. We're showing on the roundup. You can see I just go with just the touches. You see here, right there, the touches on the body, and that's where the market actually stopped. Stopped it. We paused there, and we saw it bounce back for what, 50 pips or something like that, maybe a little bit more than that, nearly 60 pips. Peso's still holding here. We did have 1947, and we said a few days ago we could stretch as low as 1935. Well, we took out the 47 a little bit lower, got as low as right at 40, but the market's still holding up relatively well. Once we took out this 23.6, that has really set the tone for much higher prices. You know how that important that 23.6 has been. And the Aussie dollar holding up relatively well. I mean, a nice rebound from the drubbing of a couple of days ago. And the dollar yen continues to languish lower here. We did show this or cover this on the looking at the daily chart. And I do believe that we're going to go to that new range. We're looking at basically just looking at the charts, nothing new. And essentially, from what I see, it could dip even lower, but what I'm looking at is about 101 and change, 101.15 to about 320, 322, something like that. But and the market just seems to be leaning towards that because it even looks worse. When we not only can, we mentioned a couple of days ago, we can't hold a bid. Forget it. We can't even. You know, I've fallen, I can't get up. Boy, this thing is really falling, and it absolutely cannot get itself up. It just feels like, you know, as far as balancing out the bids and the offers, it's not going to be satisfied until we probably drop, a pretty good chunk of change. Now, we do have, and that's going to still stay in check, that 527, but looking out further out, boy, this thing looks like it definitely needs to move a couple of hundred pips lower for starters. We can go and take a look at the cross rates. And we've seen the Euro Kiwi, Euro Aussie, both of those come back to earth after the big rises. We've gone past yesterday's bias chart support here on the Euro Aussie. And Euro Yen's pared back a bit. Guppy continues to go in and languish at the bottom, but really nothing new for the sterling pairs. And the Aussie yen, we ran into this resistance, so we kind of rotated lower. Well, with that, we shall move into the news. And Amanda was noting in the chat room UK data out in 25 minutes. And she is right, like a plethora of business investment, GDP uh, estimates, industrial output, manufacturing output, construction output, goods trade balance. I mean, boy, a plethora of data uh, at the bottom of the hour, which reminds me, I've got to set the time on this computer. It's got the wrong time. Um, let's just go and get into the news up quickly. One moment. So, morning bid on the brink. Salvini wants snap elections. Italy's government is on the brink of collapse after the leader of the ruling League Party, Matteo Salvini, called the governing coalition with the five-star unworkable and said the only way forward was to hold fresh elections. This follows months of bickering, but the straw that broke the camel's back was ostensibly on Wednesday when Five Star and League voted against each other in Parliament over the future of a high-speed train link with France. Five Star has more parliamentary seats than the League, but Salvini's party now has twice as much voter support. Polls showing making it well placed to benefit from a snap election. Still, Salvini's gambit is not without risk, pushing the country into election mode in August when Italians are on holiday and Parliament closed could hit his popularity, but Prime Minister Giuseppe Conte, who belongs to neither party, has asked Salvini to explain his call for early elections. British Finance Minister Sajid Javid issued a statement last night saying he would delay a long-planned review of public spending due this year to allow officials to focus on preparing for Brexit on October 31st. That will allow the government to fund the spending promises made by PM Boris Johnson while he was campaigning mode. In addition to aiming for tax cuts, he's already promised an extra 20,000 police officers for more health spending, higher school funding, and money for poor towns. Boy, he really is in an election mode, promising everything, just like a through and through politician. Let's see, everything for everybody. Okay, chances of early elections in Italy and Britain are rising fast, and the imminent collapse of Italy's ruling coalition prompted a reversal of sliding Italian government debt yields on Friday. Reports UK PM Boris Johnson is planning for an election in the days after October 31st. Brexit sent the pound to a two-year lows against the euro late Thursday. The 10-year Italian government bond yield jumped 20 basis points to 1.739, its highest in almost a month. And the gap over equivalent German benchmark yields widened out to 230 basis points, its widest since July 2nd. Moving on to the UK, the pound steadied on Friday after hitting those lows against the euro. Declines came after Financial Times reported that Johnson was on planning a snap election shortly after seeing through a no-deal Brexit on October 31st. What may see as the world's worst of both worlds for the battered pound, UK Finance Minister Javid, meantime, mentioned a review of public spending to allow officials to focus on preparing for Brexit, and the UK GDP numbers for June, due out later, are expected to show the economy slow to a standstill around the mid-year, following an artificial boost to the economy in the early 2019 from pre-Brexit stockpiling. The Italian election surprised saw German bond yields sink again, and back towards record lows of 0.609. Wow. Set on Wednesday after a brief fill-up late. Thursday on reports, German government was considering a fiscal boost by issuing new debt for climate protection. More broadly, world equity markets were mixed to higher early Friday after rally on Wall Street on Thursday, following some signs of stabilization in China yuan and July exports. Underneath the headlines of the biggest S&P 500 gains in 2 months, however, was a 9% drop in Kraft Heinz markets went in different directions. And bear with me. Okay, and the yen clings onto gains as U.S.-China trade rows support safe havens. The yen traded near an 8-month high versus the dollar on Friday as renewed concerns about the U.S.-China trade dispute and signs that central banks are more worried about the global economy boosted safe haven assets. The yen, which tends to be bought in times of economic uncertainty, was on course for its second weekly gain versus the greenback and its third weekly gain versus both the Australian and New Zealand dollars. The pound traded near a two-year low versus the euro after media reports said PM Johnson is preparing to hold an election after October 31st, deadline for Britain to leave the European Union. Some investors and economists worry that the U.S.-China trade war has entered a new phase that will do even more damage to the global economy, increasing pessimism and supporting risk-off trades that benefit the safe haven assets like the yen and gold. Risk aversion will be with us for a while, and the biggest indication of gold shows no signs of peaking out, said Yukio Ishizuki. In terms of positioning, some speculators are a little too long on the yen, but I think many people feel comfortable remaining short dollar and long yen. The dollar was a little change at 105.98 yen on course for a second weekly decline. On Wednesday, the dollar slumped to 105.50, the lowest since January flash crash. A break of this level suggests a move to 105 yen, analyst said. The dollar is measured against the greenback versus a basket of 6 other currencies with little change. Early in Asia, the yen popped after the Bloomberg News said the White House is delaying a decision on allowing U.S. companies to do business with China's Huawei technologies. The U.S.-China trade war brought forward the next U.S. recession, according to a majority of economists polled by Reuters, who now expect the Federal Reserve to cut rates again in September and once again for the rest of during the year. New Zealand dollar is a tad higher on the day, but on course for its third weekly decline. The Kiwi has slumped to its lowest in more than 3 years this week after central bank on Wednesday stunned traders by cutting interest rates by more than expected. One moment. And some economists say the Bank of New Zealand was trying to stay ahead of rate cuts expected from other central banks, which are likely to have a big impact on currency markets in coming months. With that, let's go move into the charts. Well, here we are on the euro, and we're going to move into the 2-hour chart. Obviously, this is key on the pullback, which is right here, this 1154, and we actually had 1160. Let me move this to 1160 for the support, and really I don't see any change there. We are holding up very well with the euro, but to me it seems it's susceptible to a pullback here. The reason is that it's had multiple opportunities to move higher, and after that blast, and nothing has changed with whole Chinese row and the whole currency manipulator and them letting the yuan go by, and so the Euros had every opportunity to make that run. And we could have blasted some people yesterday on the German news story. I mean, we ran up, but we fizzled. So it feels as if it's just going to roll over, and not roll over in a big way, but roll over just slide further as you close out the week. At least it gives that perception at this time. So we're going to stay with the 1160 on the support, and then looking here on the resistance. No, it's going to be right here. It's going to remain. When we had 1250, we can call it 1247. It's going to have to get beyond that to get things chugging along. So we'll just mark this. It's the same thing, but still put here for 1247. And you can see here with the cable, continue to just languish at these lows. It's just, it almost feels like it wants to drop to another level, almost like what we were referring to with the dollar yen. We did hold that 2094, but it just feels as if it just wants to slide even further. Um, you got 2043, 2043. Doesn't mean we're going to get to that today, but certainly the risk is that's what it wants to go to, 2043. And right here is going to be resistance 2161, 2161. And you can see we're hanging on here. If we break here, it just doesn't, I don't think the market's going to be happy until we make that run lower. And that would send us down to 2043. But that being said, 2161 on the upside. With that, let's go move into the Aussie dollar. Okay, we see a nice little pop back here after this little hammer on the Aussie dollar. The resistance comes in right here, but we'll go and take a look at it a little bit closer on the 2-hour chart with support coming right there at 67.53. And resistance coming in right there where we're at 68.15, 68.15 on the upside. At 12, we'll just move that up, but that has kept it in check. I'll move into the Kiwi. don't know why this thing is popping up here, but anyway, I'm on one of the laptops, so should be back on the main system for Monday. Well, we've had a very, very good fall here. The resistance here, if we're able to push a little bit higher, if we can squeeze beyond here, is going to be right there at 65, 65, 11. $64.93's worked out pretty well too. I'll give it some room. It only took it out by 4 pips, but we're going to still give it some more room if we get some end of the week additional short cover. As far as support, it's going to be right there at 64.51. 64.51. I don't think they're going to try and chase it any lower other than sliding back, but it would be 64.51. Let's go move into the dollar CAD. I don't know why this thing is doing that. It had a pretty good little pullback with crude oil coming off of those lows. It hasn't had a dramatic move off the lows, but when you look at the overall scope of the move lower, but it has certainly seen that short covering. So support, we can still test it a little bit lower as we close out the week. Is going to come in right there at 32. We'll call it 32.01. Potentially right here at 32.01. We'll take a look at a 2-hour chart, see anything a little bit closer. So we've gone and paired back to the 38% here. We're holding here for now. We'll have to do just, well, you have Canadian employment data now too. Let's go right there. 32.02. But you would think that the Canadian data may not come out, well, let's go with 32.02. We'll allow for that. That little bit bigger range. Although that'd be a pretty good little move down from where we've been. 32.02. On the upside, right there, 32.71. Actually, a little bit higher. Right there, 32.77. Let's go into the dollar peso. We're already seeing a pretty decent little pullback here. We had 1947. We had that for the last couple of days, and we said there's a potential this thing could pull back to 1935, but we're going to go with the levels. And that level right there is going to be 1938.6. And on the upside, 1953.8. Looking here at this dollar yen, and we could still continue to see, as I said, that safe haven. We're close here to 6, but if we do start to see that slide, I still like this 527 here on the downside. Upside, if we see a move, look, we've already seen a very nice recovery in the S&Ps. And look at this. This thing doesn't even want to change. I mean, it doesn't even want to, it's almost like as if it's frozen like a statue. So at this point, it'd be 629. Oh, we did have UK data. Oh, well, look at that slide we've seen here. GDP preliminary minus 0.2. They were already expecting a drop because of that, so no surprise there. But we are potentially, as you said, we could look for a move potentially down to 2023. That 2094 we had yesterday, but it seems like it could even maybe push a little bit further. Actually, hold on relatively well considering all the news out. Let's go into the cash dollar index. Resistance is still going to be here, 97.89. And 71. We'll go with 89 if they try and make that push. We're talking about the euro slide lower, so all about 97.89. And on the way down, 21 is key, so no changes there. Let's go on and switch over to the cross rates. Well, I'll tell you what, despite how weak the Kiwi is, it sure is faring against the yen better than the dollar. Um, at least there's a little bit of a lift, not much. On the upside, you can see here where you got resistance coming right there, which is going to be 68.98, 68.98. Just 2 pips higher than we already have. Support comes in right there, 68.34. And next up is the euro yen. Certainly it looks like it wants to go and make that eventual pushback, but on a very short-term basis, right there, 1832. We'll take a look at it on the 2-hour chart. Actually, a little bit lower here, so it's 1828. Potential move to 1828. And the upside right there at 1906. Let's move into the Euro Aussie. We did go in and on this pullback, we've gone below, or not that far, but certainly below the yesterday's bias chart support. And just past the 38%. Just a hair, we almost made there too, which is 64. You can see it right there. And that's where they just about nicked it there anyway, 64.06. With resistance coming in right there, 65.08. 08. And moving on to the Euro Kiwi. And we've come down here to this key level here with the 72 cents, just about there. The break below will just, should be well contained. Got really very close, 71.97, but you can see that the markets already had a decent rebound off of this level before we got that look at already at 75.21. We'll go to 71.98. Upside is right there, and I don't even think it would make it up there to 72.96. Let me just go on and flip this over for a 30 minute. Right there, which would be 72.71. We'll call it 72.72. And then we'll move on to the Aussie dollar, Aussie yen. This is pretty much well capped into this range here. And you can see here they're nudging up against this high, not really gaining anything with this yen strength. It still remains the same right there, 72.28. And support coming in right there, 72.62. And we can see it right here, 27.90 right there. We've had that level in for about a week ago, I think it was. But you can see right there, 27.90 is what we're looking for on the flash chart support. On the upside, $28.68. Boy, is this thing falling. Wow. And lastly, sterling rod. Certainly with the weakness in the sterling, 77.50 56, 77.56. Right there. 78.55. Right there. And getting back to the main screen, this euro, I don't think it's going to come apart, but it does have the potential to slide and challenge this. I believe this 1160. It's had multiple opportunities to go and make this move up here. It just simply hasn't. And that German story, they could have, although we saw a nice rebound off that, they really could have spiked it at that point and let the bulls run and take it up to around that 1250. And they quieted down, and then they kind of fizzled back. Even went sub, 112 before recovering a little bit. So that's a concern there. And with the news that we've had, they certainly had the opportunity to move higher. I think that it is a buy overall, but it certainly certainly looks like it's susceptible, to say the least. But that's what we've got here. Good luck with the end of the week trading. We do have Canadian employment out today, and I'll go and get this posted. Thanks again for joining us here on the European Crossover webinar. Hope the audio wasn't too bad. I don't have my mic hooked up. It's on the main system, and hopefully I'll have everything all squared away for Monday. Thanks again, and good luck to the end of the week trading.